whenever an asset breaks out of a long-term channel or makes a new decade high plus, it always catches my attention. And we do know the stock market's been in a sideways channel that it broke out of, and it looks soon to break out of even the topping pattern. And we do know by looking at the price charts that the path of least resistance for the US stock market is higher. There's another market that is gigantic compared to the New York Stock Exchange and even equities. In fact, this market is, well, as far as daily volume, the New York Stock Exchange volume, you'd have to have about 30 days of volume to equal 1 day of volume in this one asset. So it is a gigantic, gigantic asset. It is a gigantic market. And there's one specific asset in this market that has broken out to new 13.5-year highs. And so when something breaks out like that, especially if it's been in a sideways channel for almost 2 years, it catches my attention. And that is, in fact, what has happened today. And if this is, in fact, a clean breakout and will continue higher, that is going to affect the portfolio construction of many, many trillions of dollars across the globe. And it's something that I want to point out to you so you realize it's happening. Now, in many ways, this breakout happened. Well, not in many ways. This breakout was happening before Donald Trump got to be president-elect. So it didn't happen the day he got elected. And by the time you hear this, if you hear this when it comes out, it will be 10 calendar days since we've known who's going to be the next president of the United States. So that shift took a lot of markets by surprise. It literally was a black swan. A black swan is an unpredictable large event. It doesn't have to be positive and it doesn't have to be negative. Barack Obama getting elected was a black swan. Donald Trump getting elected was a black swan. Google getting created was a black swan. Facebook was a black swan. I mean, any company. I mean, look, 8 years ago, Facebook had 0 people. Maybe it was 9 years ago. And now what do they have? 1 billion people on there every day. So it was a black swan. So an unpredictable event. And certainly Donald Trump getting elected was a unpredictable event. So what's often interesting to do for me is to look at price charts when one of these unpredictable events happens and to see what is going on. And we have one of these major, in fact, it is the largest asset on the planet. It has clearly made a decision, and we have to look at that and then think about how that impacts our lives. Now, the asset I'm talking about is the US dollar, and this thing is gigantic. The Forex market, which is the currency market, is the largest market in the world. It trades about $5.5 trillion worth of money a day. The New York Stock Exchange does maybe about 30 billion a day. So this is a gigantic market. And within that Forex market, 85% of it is US dollar trading. So when the US dollar breaks out, it's important. Now, if you look at the price chart, this price chart goes back to the end of 2006, and the blue line on the chart is the 70-week moving average. Now, to me, what's interesting, first of all, this is a weekly chart, so it deletes a lot of noise. You have the US dollar in almost a 24-month channel. It's about a 23-month channel, and it broke out. It broke out to new 13-year highs, actually 13.5-year highs. And this is important because this breakout started down here. Okay, that was before the Trump election. But I have this belief that price charts collectively know more than we do individually. It's not just my belief. So it could be that the US dollar was predicting a Trump election. Now, this has broken out. This being the US dollar has broken out to new 13.5-year highs. That is significant because a stronger dollar really changes up what assets will do better and do worse. Now, if I zoom out, and I'm going to show you the next price chart and the last price chart I have, there's only 2 price charts today. This is the same price chart, but I've just zoomed out. So now we're all the way back to the end of 1996. So you're looking at 2 decades of US dollar price chart. And again, the blue line is still the 70-week moving average. Now, the reason I just wanted to show this is because we could see the US dollar go up another 20% to where it topped out. It had a double top in the year 2000. So if this in fact is a clear break, and we still need to watch what happens, but we could see a 20% increase in the US dollar. Now, the reason this is important because an incredible amount of stuff around the planet is traded in US dollars. Even if you don't want them to, that is the case. Even if you don't believe in fiat currency, the majority of things moved around the planet are moved with the help of US dollars. And so we have this major asset breaking out of this 2-year channel. It bottomed in 2008 and has been in very kind of fits and starts ways moving and moved higher, and it has just made a move higher. And this is going to impact assets. And this is something that has to be paid attention to, especially for people who are probably over the age of 50 and who have any exposure to bonds. Because what we're going to see here is when you see the strong dollar like this, you often find the price of bonds falling. The price of bonds falling. And that, in fact, is what is going on right now. And when the price of bonds falls, yields go up. And so, though we may not have seen the bottom in the price of bonds, we may have had a shorter term bottom. You know, if we go into recession, when we go into recession in the next couple of years, it's very likely we could see bonds retest their low, but that could be years from now. And if people panic out of their bonds, they're going to take capital losses. So this volatility is hitting the bond market the hardest, and this is important if you own bonds. People buy bonds because they believe there's less volatility in it. That's actually not true. And what is seeing the most price volatility right now on the planet over the last 10 days, and it's only 10 days, it's not 10 weeks or 10 months or 10 years, but is the one place where people think their money is safe from price volatility, and that is the bond market. And that is what's concerning me, because so many people have these conventional big box portfolios that are designed with kind of the 60-40 split, 60 stock or 60 bond, depending on your age. And that's absolutely going to destroy people over the next 5 to 10 years. So what is the takeaway? First, follow the US dollar because it matters. This move that is underway is going to change the portfolio construction of trillions, tens of trillions of dollars. And this old conventional 1970s idea of just, look at your age and subtract it from 100 and put, the one part in bonds and the one part in stocks is going to hurt a lot of people's futures. So if the dollar continues getting stronger, it's going to help mid-cap and small-cap stocks do better in the U.S. because all things being equal, they export less. And in fact, that's what we're seeing right now. They are doing better. It's going to hurt emerging market stocks because, like it or not, those emerging market stocks may have to pay things in dollars. It will make their products cheaper, but they have a lot of debt in dollars. And if they have to pay back with more expensive dollars, that's less profit for them. And in fact, that's what we're seeing right now too, is emerging market stocks really taking it on the chin over the last 10 days. And then lastly, you're going to see bond prices fall, and this is going to really hurt a lot of people. And if you've ever spoken to me one-on-one, you know that I never ask you what your age is. Now, I may ask it for curiosity to get an idea, but most advisors, when they ask you what your age is, they're asking you it because they want to design your entire portfolio around your age. And I've got to tell you, the stock market does not care about your age any more than the ocean cares about how old you are. And so these are very important times. Not the sky is falling or things are going to end. No. Of course not. But these are important times because there is a shift that is going on right now that can negatively and will negatively impact a lot of people. And the problem is it's invisible to a lot of people. It's invisible to them because it's going to happen, and it is happening in the bond market. And because the bond market's not as well understood and it doesn't have the same level of clarity, it's going to negatively affect a lot of people. So the big takeaways is follow the US dollar. It will indicate how to construct your portfolio. Hey guys, this is just another step in helping you protect and grow your portfolio and your future. Until next time, This is RC Peck. Hey guys, I got a really important training coming up on Monday, the 21st at 1 p.m. California time. That's specific. I said specific. I meant Pacific time at 1 p.m. And so many things have changed. I want to talk about really, is your portfolio positioned for a Trump executive office? And it hasn't been since 1928 that the Republicans or one party has controlled Congress and the executive branch. And in fact, that's what we have now. So we are under some very different times. Yes, 1928 was the last time. I do get that 1929 happened right after that. I'm not saying there's a connection, but it's not always good to have the same party run Congress and run the executive branch, but that's what we have right now. And there is a populist movement running through the world, happened in Britain, happened in the U.S. We got a French election coming up. We have a major Italian vote coming up. And look, if you followed me for any amount of time, you know that we're in what I call a contraction cycle, have been since November of 2000. And this training coming up on Monday is super important. And I'm going to actually show you, and this is the neat thing, I'm going to actually show you my 3 magic filters, the 3 filters I use to tell me exactly where to look, what asset to look at, how to be levered up, and how much to be in. It's super important. I'm going to show you exactly how it works, and that is going to happen this Monday. So get in, GoToMeeting, actually it's GoToWebinar, same company, only has room for 1,000 seats, so make sure you get a seat on that. Thank you guys for being in my world. You can sign up for that if you just go back to the email. There's a couple links both in the PS and in the body of the email to go get that RSVP. You guys are great. Thank you for being in my world, and I will speak to you on Monday on that special training. Okay, take care.